Hello, Michael Lapitte here. Welcome you back to KD's Business Tips. So glad to be with you. In this video, we're going to talk about inventory and cost of goods sold. Inventory is an important topic, but cost of goods sold is something we've kind of been holding out of some of our last videos because we didn't want to confuse income and expenses. Now, when we're talking about income and expenses, those are pretty straightforward. How much money did I earn the income? Minus the expenses equals net income. But before we get to expenses, there's another category called cost of goods sold. Cost of goods sold is typically the cost of your goods that you're purchasing that you're going to be selling. So for example, let's just use you're selling whatever widget and your widget costs you $10 to purchase it and you're selling it for $20. Okay, so your income is $20, your cost of goods sold is $10, and then the next number is called a gross profit. Now, gross profit is before the net profit, which is after the expenses, but that gross profit is after the cost of goods sold. Some companies, it might be labor as well, might be included in there, but the majority of the time it's the cost of what you're selling when you're selling a hard asset, okay? So when it comes to inventory and cost of goods, so we want to make sure we prepare an annual inventory. That annual inventory should be on your year end, and it should be a dollar value of that inventory because that has to go into your accounting records. We have to make sure the inventory is the right number on the balance sheet, and therefore the cost of goods sold will also be the right number. So do that annual inventory, make a list of all the goods you have, including any raw, if you have raw materials, things like that too as well, that all counts, okay? So it's very important that you have that inventory of raw materials as well as if you have finished goods. So if you had to build the good yourself, or if you're not just buying and selling and you're having to buy materials and build something and then sell it, make sure you have your raw materials in one inventory and then your hard materials that are finished product and ready to go, that's also inventory as well, okay? Now, if you're a professional practice, you're like us, accountants, dentists, lawyers, doctors, notaries, veterinarians, chiropractor, there's different things called work in progress, WIP. If you ever heard anybody say WIP, work in progress. Well, that's the work you're in progress, you haven't been paid for. So that's like an inventory for the service industry, and certain professionals have to record this as income. So at the end of the day, this work in progress is also a very important number, but that's more for the service, whereas inventory is more for the products. So products versus services, okay? The value you place in your items at your inventory is very important in determining your income. So you want to make sure that you're placing the right price on your inventory because we're not looking for a number of items. We're looking for a dollar amount of that inventory. And there are two acceptable methods of valuing your inventory. One is by fair market value of the entire inventory. So you can look at the whole thing and say, this is the value of the inventory if I sold it today. Now that's not usually the greatest way. I like it broken down as the other way. Inventory, individual cost of everything with a total at the end. So inventory is very important to get your inventory number right on the financials as well as your cost of goods sold number right on the financials. Any questions? We'd love to hear from you. Thanks for being a part of KD's Business Tips, and we'll see you in the next video.